All right, let's talk about Bitcoin. If you're our age, you've probably heard a million different things about it. It's a scam, it's the future of money, it's internet magic. Who knows, right? Today, we're going to cut through all that noise and get to the heart of why Bitcoin even exists and why it's especially relevant to our generation. Everything starts right here. This isn't just some random quote. This exact headline was coded into the very first chunk of Bitcoin ever made. It's basically the origin story. It's a timestamp from the 2008 financial crisis, a crisis that most of us remember pretty vividly, and one that really shaped our whole generation's view on money and trusting big institutions. So that headline, it brings up a huge question. It's the question that Bitcoin's mysterious creator, Satoshi Nakamoto, was trying to answer. What if you could create a financial system where the rules were based on math and code that nobody could change, instead of being run by people and banks that, well, clearly could fail? So to unpack all that, here's our game plan. We're going to start with where it came from, that financial crisis. Then we'll get into its built-in scarcity, which is super interesting. We'll look at why they call it digital gold, check out how people are actually using it, tackle the big criticisms head on, and then wrap up with some smart ways to think about it. Okay, so back to the beginning. For a lot of us, 2008 wasn't just a news story, right? It was kind of the soundtrack to our high school or college years. It's why so many of us graduated into a pretty terrible job market and why we're maybe a little skeptical of the traditional financial world. And that's the exact world Bitcoin was born into. At its core, Bitcoin was created as an alternative. It's a totally different design. The old system relies on trusting central banks and institutions not to mess things up. Bitcoin's system is built on a decentralized network. There's no headquarters, no CEO to bail out, no single point of failure. It's a system that runs on code, not on trust, and it's been running nonstop 24/7 for over 15 years. So if no one's in charge, how does it even have value? That leads us to maybe its most important feature, built-in programmable scarcity. You know how governments can and do print more money whenever they want, which slowly makes the money in your savings account worth less? Well, with Bitcoin, that's impossible. The total supply is hard capped at 21 million coins, forever. That rule is baked into its code. So how does the network enforce that rule? It's through this really clever automatic event called the halving. Honestly, the best way to think about it is like a limited edition sneaker drop, or maybe a super rare item in a video game. Every 4 years, like clockwork, the amount of new Bitcoin getting created is just cut in half. It makes the new supply predictably scarcer over time. And you can see that scarcity in action right on this timeline. Back in 2009, when the network first started, the reward for processing a block of transactions was 50 new Bitcoin. After the first halving in 2012, boom, down to 25, then 12.5. Today, it's just over 3. And this will just keep happening until the very last Bitcoin is mined, sometime way out in the year 2140. So what happens when you have this shrinking new supply hitting the market? Well, historically, the impact on price has been pretty massive. As you can see here, in the year or so after each halving, the price has tended to climb to a whole new level. Now, and this is super important to say, past performance is never a guarantee of what's going to happen next. But this pattern is a huge part of why a lot of people are so interested in it. This predictable scarcity is why you always hear people call Bitcoin digital gold. But I think a better way to frame it, especially for us, is to think of it as a technology upgrade, just like all the other digital upgrades we've grown up with our entire lives. And when you put them side by side, that upgrade idea really clicks. Gold is a huge $13 trillion asset, but it's a rock. It's heavy, it's slow to move, expensive to store in a vault, and a real pain to send to someone across the world. Bitcoin basically takes the best parts of gold, its scarcity, and makes it digital. You can secure it with 12 words you memorize, send it anywhere on the planet in minutes, and verify it's real instantly. It's like gold got rebuilt for the internet. Probably the best analogy is this one right here. Bitcoin is to gold what email is to postal mail. I mean, sure, both of them can deliver a message, but one of them is built for the internet. It's instant, it's global, it's basically free, and it's just fundamentally better for the way we live now. Okay, so it's scarce, it's digital, but what do you actually do with it? Let's move past just the price for a minute and look at the real problems Bitcoin is solving for people around the world right now. Because it's a lot more than just a number on a screen. This is where it gets really interesting, because the most powerful use cases are actually popping up where the traditional system is broken.
For someone in Argentina, where inflation is over 100%, Bitcoin isn't a risky speculation. It's a way to save money that their government can't devalue. For families in El Salvador, it's a way to get money from relatives overseas without losing a huge chunk of it to fees. It's really solving problems.
And this number just perfectly captures the power of this thing. Think about Christmas Day. Every bank is closed, the stock market is closed, the whole traditional financial world is shut down. But on that single day, the Bitcoin network, which is run by nobody and open to everybody, settled $45 billion worth of value. It just works. Weekends, holidays, 24/7. It never sleeps.
All right, we can't just talk about the exciting stuff without tackling the big criticisms, right? The ones you always hear. It's volatile, it boils the oceans with its energy use. Governments are going to ban it. Let's look at those head on.
First, energy. This is the big one. You hear all the time that Bitcoin wastes energy, but what you rarely hear is the context. The traditional banking system, with all of its skyscrapers, servers, and ATMs, actually uses way more energy. Plus, a huge chunk of Bitcoin mining is powered by renewable energy because miners are always looking for the absolute cheapest power, which is often stranded energy, like a hydro dam in the middle of nowhere.
Okay, what about the crazy price swings? Yep, it's volatile, no doubt, but that's not new. Think about the early days of the internet. Dot-com stocks were going to the moon and then crashing to zero. Almost every single world-changing technology, from cars to the internet itself, goes through a crazy volatile phase as the world figures out what it's worth. It's kind of the price of getting in early. And finally, the idea that governments will just ban it? Well, China has tried to ban it over and over. And you know what happened? The network just kept on running. Because it's global and decentralized, you can't really turn it off. And now, far from being banned in the West, you have giants like BlackRock and Fidelity offering SEC-approved Bitcoin investment products. The narrative is shifting fast.
So let's say after all that, you're curious. How would someone even approach this in a responsible way? Because this is definitely not about betting your life savings. It's about being smart and strategic.
So how do you deal with that volatility we talked about? By far, the most popular way is called dollar cost averaging, or DCA. Instead of trying to be a genius and time the market, you just buy a small fixed amount on a regular schedule, like $50 every month automatically. It smooths out your entry price and takes all the emotion and stress out of it. You just set it and forget it.
Another really smart way to think about it is the 1% approach. You take just 1% of your entire investment portfolio and put it into Bitcoin. The logic is really simple. If it goes to zero, you've only lost 1%. It won't sink you. But if it does what its supporters think it can do, and say it goes up 10 times, that little 1% just added a 10% boost to your entire portfolio. It's what they call an asymmetric bet.
But before any of that, this is the golden rule. Seriously, the most important thing to remember. Only invest an amount of money that you would be perfectly okay with losing completely. This is not a stock. It's not a bond. It has huge potential, but also huge risk. If the idea of your investment dropping 80% tomorrow would stress you out, you've invested too much. And so, at the end of the day, the real question for our generation isn't just, should I buy Bitcoin? It's a much bigger question. In this world we're inheriting, a world that's getting more digital and more indebted by the day, what role will a scarce, global, digital currency end up playing? That's the real question to think about.